Hi, this is Bo Yoder. Just wanted to update a little bit on the Coca-Cola trade I talked about in my three-part article from the last couple of days. Looking at it, as I wrote, we had a market that had rallied, come up here, shown some signs of resistance, broken down, but nothing too violent after that one big sell day. See a little bulge here of volume, and then it goes back to, except for this one day, not a whole lot of action. Then the market really tried to rally, came back in, was trying to form a higher low. It has since just continued to zoom sideways, beginning to form a little bit of a doji here in Friday's session. I'm kind of afraid that this is a bear flag, which is going to deliver some movement back down. Still thinking that a higher low is possible. In fact, if I drag on the weekly chart here, you can see here on a weekly how it's fighting. It's fighting with topping tails. Wouldn't be at all surprised to see it drop down towards $40 per share, make a higher low, and then continue higher. So pretty nice higher low offered there, but I think there's a chance to either add to the position as it goes a little bit more towards the $40 per share level, or perhaps just wait for an initial entry in that zone um, in Coca-Cola. In the meantime, let's take a look at GE. Remember General Electric, my low-level base, right around $10 per share. Nothing epic in terms of rallies, but a very slow, steady move. And this really highlights to me the weirdness that we're seeing in this market. Now, this is pretty self-explanatory. Classic textbook example of capitulation with large movements to the downside, high volatility bars, ridiculous volume. That really shows the washout effect in a very clear manner. Then we had a bit of a bounce, and we had our base, and we had our break, we had a retest and a breakout. And actually, if it makes it easier for you, let me just go ahead and draw that up. So there's your breakout. Market comes up, comes back in, retests the former area of resistance. Resistance now broken becomes support, and the market moves higher. But we're really seeing a parabolic rise here as the market accelerates to the upside. None of these bars have very much width, if you'll notice. They're very odd little grinding bars. Not at all like the sell-off bars we saw here or the rally bars here, where there was a bit of trend and overlap on any given day. Here they're just grinding higher, higher, higher. Certainly looks like they're headed for the $15 per share area, and I would be watching for higher volume as that level is tested. Again, if I just bring over a weekly chart, you can see at $15 per share, let me open that up just a hair, is an area of strong chart resistance. So while I still think this stock has the great potential to move up 20, 25, even 30 towards this former resistance from 2008 and the 200 period moving average on a weekly, remember, I wouldn't think that 15 is going to be the all-time high, but certainly it should be a short-term high, which offers a chance to either take profits or add to a position on a pullback, what have you. But an interesting example of a market moving into capitulation, moving up, basing, breakout retest, and now a parabolic rally into what'll probably be a high around $15 per share. So we'll watch for increased volume there, increased volatility, and hopefully we'll have a good example of a capitulation to euphoria rally in General Electric. So there you have it. Nothing very exciting out there for me. If we go to the SPY, the S&P 500 itself, it's not unlike General Electric. As you know, I'd been bearish for some period of time because we had strong levels of resistance here, some more resistance levels just around the 90, just below the $90 per share area. Those were all broken through and broken out. And so my bias goes back to neutral, which is pretty much where I've been for the last, 7 to 10 days. Now I think we're moving up very much like General Electric into areas perhaps either $95 per share or maybe even as high as 100, though that seems a bit unlikely. This market eventually has to fall out of bed and form at least some kind of a wiggle. This action is very unusual, and it smacks of an oddity, of a forced buying, of a market external event. Obviously, I think a lot of it has to do with this bailout and the whole TARP money sifting through the financial sectors. That may be part of what's driving us higher, but eventually this buy wave will be done, and we will end up crashing back down. In this case, I believe to perhaps a higher low, if not a retest of the lows. Still think that's the scenario. I've never seen a market ever that makes a V bottom like this that sustains. It always has to either base for a couple of months, form a little micro crash like that before it makes a higher low or something. It has to shake that tree, and it really hasn't yet. We've gone from screaming panic to now grinding bullishness, and that just never ends in a pretty manner. So obviously there's a first time for everything, and When you trade based on historical tendencies, and the historical tendencies are replaced by an anomalous action, which is what this is, then you lose money. And that's exactly why the short I took, what was it, here, and I think it was here, all got stopped out, even though they were very high percentage plays. So back on the sidelines, pretty much just watching my individual stocks. And in terms of S&P trading, I haven't taken a trade now in almost 7 or 8 days. Just waiting for the market either to pull back to retest its breakout area, very much as GE did, or form some kind of a little crash bar where we can get a small intraday short off or something else. But for now, we're grinding higher. There's not a lot of bullishness or bearishness on that chart in my view, and really just sitting back in a much more reactionary mode. So there you have it. As always, thanks for listening. My name's Bo Yoder. Good luck and good trading.